Good morning. This is Tony Cherniawski with The Practical Investor. Today is June the 3rd, 2010. The topic for the day is entitled Showdown at the Lazy M. This video is meant for instruction and entertainment purposes only. This is not a solicitation to buy or sell any security. A purchase or sale of a security may result in a loss of principal. Please consult with an expert advisor who may explain the risks of any investment you may consider. You cannot invest directly in an index. Well, good morning, and I just thought I'd bring you up to date on what's going on with the market. There's a lot of bullish sentiment out there, and I just want to add my 2 cents to what's going on. What I want to do here is not necessarily show that I am correct. What I would like to instead show is that I've studied the situation very thoroughly, and I've got a unique analysis that might have some bearing on where the market goes next. So let's just recap what's going on here. There's a lot of analysts that are calling for another rally to 10,750 in the Dow, about 1,150 in the Standard & Poor's Index. I just don't think that that's going to happen. I had a chance to talk with an old-timer, and this guy really is quite a salty character, but he's got his own unique way of looking at things. So let's take a look at this, because I think it's critical to use this gentleman's analysis along with a few comments of my own. Let's go right now to the chart. Okay, we're looking at the Dow Jones Industrials. Of course, I've left in there my broadening top formation, and I just want you to know that that's still valid. And but if you'll notice, I added something here, what I would call a lazy M formation. This is brought out by a gentleman that's not very well known, but has years and years of experience in the business. He calls this lazy M a very bearish formation, and one of the things that I'm just going to point out as I traced out the lazy M over top of the Dow, the fact is that the Dow has had a very hard time getting back up to 10,250. As a matter of fact, we have the 200-day moving average here at 10,295, and it appears that we're just in the process of testing that right now. The point of the lazy M is this. You know, a lot of people are looking at this and say, well, now there might be a head and shoulders pattern if only the Dow goes back up to about 10,700. That would kind of even things out a little bit, wouldn't it? Well, the unfortunate thing is that the rally up to 10,920, which happened on May the 12th, probably did that job. So in effect, the lazy M pattern that our friend Chuck is talking about is really a form of a modified head and shoulders pattern. The point that I want to make here is the most recent decline into last week actually broke all supports. So in other words, the Dow fell below not only the May 6th low of 98.69, but also fell below the February 5th low of 98.35. As a result of that, we have a breakdown technically that you cannot ignore. This is not bullish either near term or longer term. And as a matter of fact, what our friend Chuck calls this little pattern after the M is the trapdoor. And the trapdoor appears to be possibly triggered by the 200-day moving average. It could go a little higher than that, and I'm not going to dispute that, but the possibility of the Dow going back over or up to 10,700 is probably next to nil. So I just want to point out things are going to get very interesting. The market's at a showdown right now at the 200-day moving average, but also the lazy M is telling us that, which might be looked upon as a modified or complex head and shoulders pattern, is telling us that a breakdown is near, and you need to be very, very careful. What I want to do at this moment is just let you know that our newsletter subscribers are being brought up to date moment by moment. One of the interesting things is I was on the phone last night with some gentlemen that we discussed some of the options in the market right now. And I sent out a brief memo about 11 p.m. last night called Analysis for Insomniacs. So I'd be glad to send that along to you. I think it's a worthwhile analysis. It seems to be nailing what's going on here in the market today. And there's still a special going on. $50 will get you a subscription through July the 15th in our Inner Circle newsletter. So please be aware that I am actively managing money, and this newsletter is my observations on a daily basis of what's going on, what I see in the market, not just from a theoretical point of view, from an actual dollars and cents. Here's what's going on a daily basis. So again, the newsletter subscription is $50 for a subscription through July the 15th. I look forward to hearing from you, and you can reach me at tonyc@thepracticalinvestor.com. That's my email, and you can also reach me at www.thepracticalinvestor.com. There's a button for contacting us. Please feel free to do that, and I'll be glad to respond as quickly as I can. Thank you, and have a great summer.